Hello, my lovely people. It's Monday. It's Labor Day in the United States, which means a day for work, labor, I think. I don't know. I work every day, so it doesn't matter to me. But happy Labor Day anyway. Anyway, so we've got two people coming from the European side and two people from the North American side. Let's go around the horn. Mando, hanging in there okay? I see no purple shirt today.
No purple today. Doing fine. Yeah, the market. I didn't even know we were doing the show, but I trust that we'll never miss a public holiday in the US.
And the promise is I'll always be here. Even if nobody else turns up, it'll just be me and the audience chatting. So, CTO, you hanging in okay?
Absolutely. Let's see what we conclude with the markets. Exciting show.
Very important. This one is Rektember or not. I have a theory on this. And Marty, back from a trip. We'll talk about that later.
Yeah, how are you guys doing? Good to see you all.
Good. Thank you all for coming. Let's get into the story. This one's called Rektember or not. And the question is, did we front run Rektember in August? And because August coincidentally was down 6% for Bitcoin, which is exactly the average drop that Bitcoin has in the month of September. And we do know a lot of things are kind of moving forward the cycle, and the cycle is being elongated. Forward meaning we had an all-time high before halving. It's never happened before in Bitcoin. The ETFs, the treasuries are having a huge impact on the market, and many believe it could elongate the market. Could that impact the famous Rektember? So before we jump into the big story, let's tackle that one first. Everybody is afraid. Mando, your thoughts?
Yeah, look, the market's lost some support, it feels like. I think Bitcoin kind of going below 110 has got people a little bit scared. I am unsurprised that ETH, having gone from, 1,200 a few months ago to trading at 4,900, we're going to have a bit of a pullback. And I think that naturally comes back with Bitcoin dominance too. That's why I've been saying, I think it was a rotation into Bitcoin made the most sense. I continue to like Bitcoin as the trade, honestly, for the next month, maybe the next couple of months, as I think you'll have a volatile period here potentially for alts. Just as I don't think ETH is going straight back to all-time high. I think it's going to have a period of consolidation here. It might go to 4K-ish. It might just range here for a little bit, just because it's been such an aggressive move up. And I don't think it's obviously, you know me, I think we're in a multi-year bull cycle, so I don't think you need to freak out about anything like that. And I think I still believe in the correlation between Bitcoin and global money supply. That's why I still think we're kind of going higher. But I do think my portfolio is more defensive since the last 2 or 3 weeks. Since ETH went from 4K to all-time high, I've been reducing and putting it into Bitcoin. I bought a bit of Link as well, but generally I'm more defensive.
It was quite uncanny. I don't know, CTO, if you have an ETH chart, but we just pierced the previous all-time high and immediately sold off after that. Was that classic profit taking? People have been waiting 4 years to get back to all-time highs and then take profits. I see Mando nodding his head. He believes so. What do you think, CTO?
Yeah, probably. Let's look at some charts. I think so. Let's start with Bitcoin because, of course, it sets the mood for the whole market. And I can say I did not predict this or anything. I kind of thought that this level here at 112,000 would hold like it did in beginning of August. But it didn't, actually. It fell through here. So the question now is, if this is a fake, if someone is trying to manipulate everyone here, us included, and everyone watching, into panic, and when the last optimist has given up or gotten liquidated, run it back up again. Or if there really is change of tunes, because there is 2 support levels which have broken. We're approaching the third one, which is here at about 106,000. That was a resistance previously, and could provide some support before we get into the big volume section here. And of course, I don't know, and no one can say for sure, but it has been a little suspicious, I think, that some of the big selling has happened on low liquidity weekend and so on. Holidays and low liquidity weekend. So it smells a little bit to me. It smells like a fake. especially when looking at the rest of the market. Like gold has had a breakout, like a significant, massive breakout into continuation, where it felt like it might turn here and break the parabola. No, it broke out, like massive strength.
Yeah.
Stocks is still looking
and by the way,
strong.
by the way, on gold, an important point, CTO, every time gold breaks a new all-time high, exactly 30 days later, Bitcoin does. Historically.
Exactly. They are typically correlated like that. Exactly. So like gold going like this, stocks still looking strong, yield starting to drop. We have rate cuts coming. Why would Bitcoin dump like this? It kind of smells a little bit to me, and that's my main take. But if this support breaks also, okay, then perhaps there is something going on that is not so good. But that's my take on it. Let's look at the ETH question that you had, and we have to zoom so far out. So it was exactly like you said here, that it broke all-time high by an inch and then backed up a little bit. But this chart still looks pretty strong. It hasn't really just bounced off the support. And ETH BTC also looking strong still. It hasn't turned around. And the significant change, I think, that we talked about the past couple of weeks is that Solana to BTC has, for the first time in 2025, really turned up and showing a lot of strength. So the question here is if we're seeing the rotation from ETH to Solana already, perhaps maybe front running the equity vehicles and so on that we'll talk about later. So that's the exciting thing. And so summarize, I don't know. It's a little surprising weakness, but it smells a little bit like a fake.
And we already had, August is always quiet, a very low volume month anyway. People are on vacations. They start coming back tomorrow. Maybe things pick up. And that's why people come back and then they shake their heads. What do we do? Hit the sell button, panic sell. We'll talk about panic selling in a minute. But Marty and the rest of the gang, there was a lot of FUD last week that actually scared the markets. Number one, that whale dumped another bag of 18,000 Bitcoin after the 25,000 Bitcoin. It had everybody rattled. And then there was this chain floating around crypto Twitter. Oh, I'm out. I sold everything. I moved to cash. And everybody copied, pasted the same thing. One guy wrote a Substack on it. Apparently, it's all just a crypto Twitter joke that some people misinterpreted. But can you give us confidence that it was a joke for the audience here so they don't hit the panic sell button as well? Marty, what do you think?
I'm pretty sure it was a joke. I mean, I don't buy that stuff at all. In my opinion, everything is on schedule exactly the way it should be. I mean, we've just got over-leveraged traders at 105,800 that all came in on that previous move in July that the exchanges are trying to shake out and sweep. Once that's done, I think we'll see a short squeeze following gold. I mean, finally, gold has broken consolidation. CTO just said that. We've been waiting for that. Global liquidity is going for all-time high. Gold's just about to go for all-time high. They usually lead the way, just like we did last time in May, June, July. Bitcoin will follow. It'll be an almighty squeeze, taking out all the over-leveraged shorts, probably to 123. So, we're all on schedule. Just be a little bit more patient. Just remember, the exchange is not going to let anybody with over-leveraged longs win, and they're going to come and hunt them. And they've been doing it pretty systematically. And over the weekend, CTO said. That thing on Twitter, I think it's just fake. Everyone always does that. You know, someone will say, I'm out, I sold everything, and then everyone will just copy it. It's just a big joke.
Yeah. By the way, you did mention money supply. It keeps breaking new all-time highs, but people are also concerned. I mean, I've never seen people so rattled, and they should be rightly so. People still have PTSD from the last cycle, and everybody's terrified of missing the top. But here you see the chart. Yellow is global money supply, just broke a new all-time high last week, and blue is Bitcoin price. And we're seeing a big decoupling. And Mando, you know, they typically follow each other with some maybe nuanced oscillations, deviation from the mean, whatever you want to call it. What do you think about this first, and then back to Marty on global M2 money supply decoupling? Is it a concern, or is it just short-term noise?
I mean, you never know with these sort of things, but this has been a pretty strong correlation. And I would say that this is the underlying bid for not just Bitcoin, but a lot of risk assets, including gold as well. So it's a fundamental correlation. It's not just, these two lines have shown correlation in the past. Like there is a reason for those two to show correlation. This is literally the money printing that's caused Bitcoin to go higher since the beginning. I think we will see a recoupling of that. I think what we have seen is a little bit of an altcoin season over the last month. So maybe some of what this shows is that like movement into ETH a little bit, and like the total crypto market cap rather than just Bitcoin probably performed a little bit better over this period. But I continue to think that this will be a correlation that lasts for many years. So I expect it to come back.
Yeah, Marty, you concur?
Yeah, you can see in July, middle of June, July, I can see the same decoupling for the chase to get the longs. They do. That's what they do. Remember, there's no derivative pool against money supply. Nobody's longing and shorting money supply, but they're shorting and longing Bitcoin. So the exchange will chase them down. There you can see in July, we did the same thing. And look what happened right after it. Look how it caught up. That's going to happen again in a bigger way, I believe.
Yeah. Well, we also have the Uptember and Moonvember. I'm going to switch gears right now. I don't think we've ever spoken so much about gold in the history of this show. But the reason, everybody, we care about gold is it's good for Bitcoin. Consider it like a canary in the mine. So we have this crazy chart here. This is how much global international reserves are held across different assets. Red is the dollar, blue is the euro, and the bottom golden yellowy piece there is gold. Gold just hit a 25% share of global reserves. That's the highest level in over 30 years. And this is the third straight year of gains, and gold is experiencing unprecedented demand. So the question is, why? Is it because people are terrified about fiat? They understand the game now of infinite money printing. The dollar fell to 42%, by the way. That's the lowest level as well for nearly 40 years. Euro is staying flat around 15%. Gold overtook the euro, I think, back in 2024. And now it's the second largest reserve asset. How do you interpret this CTO? We've seen gold have its best 2 or 3 years in 20 years. Is this because of complete lack of confidence in the fiat system? Or gold is shiny again?
I think it's the complete lack of trust in the fiat system. I mean, I'm worried. We talked about it several times here. Like, could it actually happen that we get hyperinflation in Western countries? And I don't think the risk is zero. And we're like a bunch of crypto enthusiasts sitting here. Imagine working at some central bank and you have like 40 years of experience in macroeconomics. Surely you are at least a little bit worried, right? If you're sitting there and you're responsible for this, maybe you start thinking, perhaps, we should load in some gold bars here just in case.
Yeah.
So I think so. I think hard money, hard assets is back in fashion, and reasonably that should benefit Bitcoin. I mean, it is the digital gold. Like, if you're sitting there, surely there must be people thinking maybe we should have some digital gold also, just in case it catches on.
Exactly. That's why I think this is such good news, because wait till they understand exactly what Bitcoin is. It's so much superior in so many different ways. Mando, from your TradFi experience, would this alarm you if you were a country making fiat for a living?
I think this points to the idea that most foreign central banks are moving away from owning treasuries to buying gold right now.
Yeah.
And at the same time, you're also seeing a lot of them look at ways to stack Bitcoin. So, like I said, I think it is this movement away from fiat into hard assets. I think this just shows what we were saying about before, like gold breaking out and there being a constant bid for it just shows all the underlying factors which will make sure that Bitcoin stays strong. Like these will be the things, if you look over many months rather than many days, what will continue to be the bid for Bitcoin. So I like any dips.
Yeah. And then there's this other survey that came out, and Marty, this is for you. What are the odds of Bitcoin becoming a reserve currency around the planet? 35%, they're probably all Bitcoiners, by the way, are very confident Bitcoin would become a reserve currency, basically becoming very evident on this chart down the line. But all it takes is that game theory, one big domino to fall. You can see 4%, 5% think no confidence, skeptical 15%. You know, moderately confident 45%. You add up moderately and very, that's 80%. That's Pareto efficient.
Yeah, I think it's always been the case that Bitcoin is probably the second largest candidate to be the next global, commoditized reserve currency after gold. I mean, just understand, China and India are stacking gold. They're doing it for fears of sovereign debt crisis. It's always been the case. And Mando's exactly right. They're choosing gold over treasuries, and that's why there's been such an aggressive move to legalize stablecoins and to issue stablecoins as a buy of last resort for treasuries, which I think will continue and continue fast. But at the end of the day, gold. I think the entire world is concerned about the status of the US dollar debt. It's a train out of control. No macroeconomist will argue with that. The problem is, what is the solution? There is no proposed solution. The only solutions seem to be coming from sort of the Trump administration and Besant, and they involve Bitcoin. I think Bitcoin is seen as a way out of this, but China, we know, are anti-Bitcoin, or on paper at least, and they've been stacking gold. That's their strategy. And the cycle repeats. At first it goes money supply, then gold, then Bitcoin. And it's playing out exactly like it did a few months ago. So I think gold will probably run at its next Fibonacci, which is, just under 4,000. It's kind of funny. Gold and Ethereum always seem to run sort of in a similar price range. So it's probably around 4,000, pull back to 3,800 or the 50% of 3,700. And then I think we see Bitcoin move up to the 140, 150 range.
Yeah. It's funny. You talk about money flow and Ethereum. Money flows last week were very solid going into Rektember. So TradFi is bullish again. There was a weak period, 2 weeks in the middle of August, where these things sold off. You can see month-to-date flows for Bitcoin in the month of August was down $300 million. But Ethereum up a massive $4 billion in August. Tom Lee lit the fuse. He brought, I think, single-handedly at least something like $15 billion into the space between ETFs, ETPs, and Bitmain and other players. It was absolutely an incredible thing to see as a finance guy. And then the other flows are all kind of solid as well. Even though there's only one proper ETF for Solana, it had a very good week as well last week, 177 million, basically adding a big chunk to the pie. What do you guys think about money flow? CTO, did this surprise you that the TradFi market is back so fast?
No, I think that they're just people like everyone else there. When price goes up and there's enthusiasm, they're gonna shove in more money. Then price goes down, everyone panic, and they're gonna panic sell. It's no different, guys. It really isn't. So I think that's what we're seeing here. We had a very good month and and then money flows in, and now when price is down, it's going to be a minus, I think.
I love the way you said panic sell. We'll circle back to that topic in a minute because there is a little bit of panic selling last week. Mando, money flows look strong to you?
Yeah, it looks strong. I think this, like you said, it's mainly been TradFi buying ETH, which has been the last the last month and a half. I feel that trade, because the MNAVs on these vehicles is pretty close to 1 again. Like if you look at where SBET is trading and Bitmine, like the ability to raise a ton more cash to buy ETH is a little bit more difficult. But I do still think the institutional taste for ETH is still there. That's why I still think ETH can have a good rest of the year. I just think it's going to take some time to consolidate. I think it was a very aggressive move, that move in ETH, and at the top people were calling for 16k ETH, and it just felt like, right, let's just take a breather.
We saw crazy stuff happening with the NAV premiums. You mentioned that Bitmain, Tom Lee's shop, went from 1.65 to 1.06 in 2 weeks. In 2 weeks. I mean, basically, the whole NAV premium evaporated. Why?
Well, I think there's firstly, there's supply. There's a lot of different vehicles doing this. And secondly, I think there's just not as much of a unique story for any of these anymore. And I think, some of these are going to start trading below MNAV. There's no doubt in my mind. And then we're going to have to work out what's going to happen with consolidation, or if they're going to have to maybe even consider what they're going to do with the assets. Like, I don't think this trade is as clean as it was a month and a half ago. I still own ETH. It's not a big bit of my portfolio anymore. I don't think it's going to be. I think that institutional bid for ETH is not going to be as strong. I don't know if it's going to be strong and move into other things right now either. I just think it's the MNAV has been the main thing around these vehicles, and most of them, even for most altcoins now, is trading close to 1. So the idea of like a shelf for $30 billion worth of any altcoin being bought, I don't see it anymore.
Yeah, I'll pull up all the MNAVs as well a little bit later. We'll circle back to that, but you're right. A few of them are selling at a discount, which is kind of shocking. Another interesting thing that happened, we've been talking about Jerome Powell's magical 2% for years and years and years. Well, according to Truflation, we hit it right now. The government reports 2.7%. Truflation's at 2%, which is good. So that should give us enough fuel in the fire, hopefully, Marty, to cut rates in September, which looks like a 90% chance of happening. You still confident in that rate cut?
89.7% now. I mean, more interesting is the probability rising on a further rate cut in October and a further rate cut in December. Those are the interesting ones. It looks like a rate cutting schedule is emerging. And yeah, I think this entire move down on Bitcoin was to front run that. I think leading into the next few weeks, we should start to see a lot of surge in bullishness and optimism. Going back to the Ethereum thing, I mean, you got to go back to the fundamentals. Why are these treasury companies even buying crypto? Why are companies buying crypto in their treasury? For stability, right? To reserve instead of dollars and debt.
Also, to pump their stock.
Right, they want to pump their stock. So how are they going to pump their stock? Okay, price appreciation, but more importantly, I think, is yield. And so you got to look at the yield fundamentals of all of these treasury companies and their strategies. Bitcoin, the big question is, how does Bitcoin produce yield? And James, that's a question for you that you could maybe give a good answer for something like a MicroStrategy, which seems to be building their own yield curve with all their products. But Ethereum, is making 5%. There's other options out there emerging with Generation 3 chains that are making up 12 to 22%. So I think the minute TradFi realize that, they want yield more than anyone, they'll flip. And I think there'll be a big flipping once again. We always talk about it. I think it's going to happen.
Exactly. And we're going to come back to all that yield, inflation, staking rewards, NAV premiums. That's a lot of topics on people's minds. But I find this chart really fascinating, and CTO, you probably can replicate one even better. But this is the purple is the Fed funds rate, and the blue line is Bitcoin. And basically, it's hard to kind of map them up. It's not a log chart or anything else, but every time rates get cut, Bitcoin goes to the moon very, very quickly. We're talking within weeks, everybody.
That's a cool chart.
Although it doesn't look like a big move here, we're talking within weeks, 40%, and then within another couple of weeks, another 50%. So that's a doubling of the Bitcoin price. That's what happened historically. Now, what's interesting about this chart too is we have the Bitcoin price near all-time highs and the Fed funds rate near all-time highs during Bitcoin's existence. We've never been in a situation where rate cuts happen and Bitcoin price is so high. If this pattern follows, we are going to have a bonkers Q4. That's what I see. Who can steel man me on that? Mando, am I smoking crack?
Well, traditionally, when you cut rates, something really bad has happened, right?
That's true.
Most other cutting cycles have happened when there's a recession or it's COVID or, the shit's about to hit the fan, so to speak. We have cut rates a little bit, like what was it, 1 or 2 times from their highs. And this is more they're trying to do a soft landing sort of. So I think this is slightly different because normally rate cuts coincide with massive money printing. And I don't think it's going to be that this time. I think it could just be 1 or 2 cuts and then they'll see. At least that's what they're indicating, unless a lot of this depends on the strength of Trump to kind of control the Fed here, of which he's indicating, he wants to really have an aggressive Fed here. So I don't know. That remains to be seen. But at least I think until the end of the year, I don't think we're going to see cutting rates and massive money printing. So I don't think this time is like the other times. That being said, the other take that I often see is that, oh, cutting rates is really bad for markets. You know, oh, this normally coincides with the market selling off. And that is the same correlation, because cutting rates normally coincides with shit hitting the fan, like something really bad has just happened. So a lot of people look back and go like, oh my God, when they cut rates, normally the stock market falls. And actually that, I think that's getting the causation the wrong way around. So I think cutting rates this time is very bullish, and I wouldn't get caught in the idea of like the correlation will be really bad, but I don't think it's going to be the same as Bitcoin immediately goes to like all-time high.
Yeah, and there's the quick live data. There's a 40% chance of 3 cuts before the end of the year. There will definitely be 2, 25 and 25. And then they might, as you say, Amanda, wait and see. And next year there'll be another 2 or 3. But the current administration wants to bring this down. They want to really grow the economy in this era, light the fuse, blow it up. Marty, any thoughts on this one? Rates down?
Yeah, I think everybody that lives in the Western world is very aware that we have been going through a recession. I think the problem has been the reporting of numbers and the technical definition of the recession. I think if you look at delinquencies and real macro indicators like bankruptcies, delinquencies, credit card debt, repossessions, people are living on debt. I think we've gone through quite a significant recession since COVID, and it's been disguised and gaslit that we're not. And I think that'll all catch up. And that's why there's so much pressure on the Fed. I think the Fed has been complicit of that. And I think there's nobody that can disagree with that. So I think we're going into quite an aggressive rate cut schedule together with a quantitative easing schedule. I think they're going to print as much money as they did for the great financial crisis. The debt to GDP ratio is higher than the Second World War right now.
Yeah. And I remember a stat about 8 years ago in China, young people, like people under 25, weren't able to find jobs. We are now seeing the exact same situation happen in the Western world. Young people under 25, if there's any young people here watching this, drop a comment below, but they are finding it hard to find a job or a good job or retain a job. And it's very serious. CTO, what do you see in your world?
Yeah, I think like at least the market is conditioned. Like we can see it from the Powell speeches. If there is outlook for a rate cut, the market goes up. So that's probably the immediate reaction. But how it plays out long term, I'm not really sure. I mean, the Bitcoin has most of the time been inversely correlated to the yield, meaning that if the yield goes down, Bitcoin goes up and vice versa. It has been little different periods. During some periods of the market, it has been one of the most useful tools, actually, to get a clue what Bitcoin will do next. During some other periods, it has been more disconnected. But I do think if we get rate cuts and dropping yields, I think it will be positive for Bitcoin.
Yeah, there's another angle too, and I haven't done it yet, but a chart would be very interesting with the Fed funds rate, money supply, and Bitcoin, and create like a composite score of those things. I mean,
with James, one final point. I don't think people are aware. They should be aware. When interest rates are high, then there's more incentive for people to keep money with the government, right, in treasuries, because you're getting a guaranteed 5%, 4.6% for large smart money. That's the best deal, guaranteed money. So when they lower interest rates, then money flees from the government's control back into risk on, back into the economy, because they chase yield, higher yield. And I think that has really been the predominant tone. We have a debt to hard money strategy in sovereigns and in institutions, which is the flight to gold, the flight to Bitcoin, to move debt. Look at Michael Saylor. How can I find cheap money and put into Bitcoin? That exact strategy is playing out in sovereigns. It's playing out right now throughout the economy. And I think lowering rates is just the final straw. It's basically, that'll be the big unleashing of money onto the economy. I think you're going to see risk assets explode the minute they lower rates. Even just the hint of it, you can see the pressure. And absolutely, people must know that the government, financial repression, they want to hold the money. To hold the money, they put rates up. Everyone puts their money with the government. To put the money back into the economy, they lower rates. Cheap money, that's the way it goes. So you
very eloquent.
Yeah, go ahead.
Yep. Beautiful, Marty. Nice one. A quick scam warning, by the way, from Hudson the dog here. If you have a Seeker phone, there's a Jupiter scam being sent to this phone. By the way, if you get anything airdropped to you, always verified first. Don't just click on it because it'll drain your wallet. Anybody here got a Seeker yet? I know they're trickling out. But you got your Seeker already? Okay.
Yeah,
Good
I've got
stuff.
a Stargate and a Seeker. I've got them both. They're amazing. Yeah, just that's a good warning, James. You should reiterate it again. A public service announcement. Understand people will scam you. They'll send you fake tokens, especially like LFI today, the Trump token. There's like 20 different fakes going around. The Seeker phone, they know you're hungry for airdrops. They're going to send you things that look like real tokens. People respect every click in crypto. Double, triple check every contract address. Go at the attitude that they're trying to scam you. When nothing is free. If you get something for free, it's probably a scam. Just respect the click. Okay.
Age-old saying is no such thing as a free lunch, everybody. It's like,
Thank you.
It's like the other analogy is send me 1 Bitcoin, I'll send you 2 back. Would anybody ever hand over a bag of cash to a stranger on the street? That's the only thing you think about. Anyway, let's look at some CAGRs. This is a cool little chart here. This is a 5-year compound annual growth rate for Bitcoin. It's so impressive. A 5-year CAGR for Bitcoin is 58.2%. NASDAQ 14%, S&P 500 13%, gold 11%, silver 6%, and emerging markets down 5%. For anybody who is in doubt, the last 5 years have been absolutely epic. You take out your little calculator, CAGR 58.2% times $100 over 5 years. It'll blow your mind, the result. But that's interesting. I know other assets have been better. You know, MicroStrategy did 3x this CAGR, so it's been completely bonkers. But any thoughts on this as well? Bitcoin versus everything else?
I think the funny thing
sorry. I just want to say it's the best performing asset of all time, if looking at the whole history. That's it.
I was going to echo something like that. Basically, that I think a lot of people in crypto think Bitcoin's so boring. You know, it's like, oh, I don't want to own it. It's beating every other major risk asset. Like crypto as a vehicle which people are investing in is such a small slice of global markets, and I think most people would fall over themselves in professional risk taking to get 50% a year, and we managed to muck it up by, you know, over leveraging, buying the wrong thing. Just make sure you have some Bitcoin. All right.
And this dovetails perfectly into the psychology session of the day, panic selling. And the reason I mention this, people panic sell at the bottoms. They also panic sell halfway up. Sometimes if they panic sell at the top, they're killing it. But there was a lot of panic selling last week because of that story we mentioned before. But this is somebody who sold at 16K, and it was the worst mistake in my life. Because sometimes when you get off the train, it's very difficult to get back on. Sometimes you don't have the courage to get on the train in the first place. But I just want to quick round the table here for everybody. Where do you think we are? We will talk about what to do with bags that aren't performing in a minute. But what words of advice, CT, I'll go to you first. How do you stay in control and not panic sell at a bottom or halfway up to the top or anything else? What's your method?
Yeah, need some kind of methodology. Need a plan ahead of time. Step 1, have a plan, and step 2, follow the plan. And it's usually the step 2 that is the difficult part of that.
Yeah.
So that's really what's needed, because in the moment it's difficult to keep your head cool. Then you need to go back, look what was the plan and so on. Because otherwise, risk getting the timing consistently wrong. Otherwise, you buy at the top instead, when the euphoria is at the top, and you sell at the bottom when it's like most depression. So need to find a way to kind of do the other way around. And the best way is to have a methodology and need to write it down. Like, this is my methodology, this is what I'm going to do. And second part is to kind of not make it a binary decision. It's very difficult to say, okay, today I will sell everything. Today I will buy Bitcoin with everything I have. It's very difficult to do that. It's easier to ladder in or ladder out. So, you know, when things start looking worse, you maybe sell 20% and then see what happens, maybe another 20% and so on, and the same thing at the bottom. You don't need to catch the bottom on the day or on the dollar, because we see how far it goes in the end. So that's my 2 tips. Have a plan. Secondly, ladder in and ladder out instead of making it one life-changing decision, because it becomes too difficult to press the button.
Yeah. By the way, a quick update I just got from somebody. Big thank you, K8. This is from a member of the community. Back to the scam, by the way. This is a very real scam. Somebody just got their Seeker phone and received a Jupiter airdrop, 3,000 Jupiter tokens in a Seeker wallet. Sounds very exciting when it's free. And exactly what you said, Marty. Everybody expects these free money airdrops. But they said, then you got to scan a QR code, which sounds unusual, connect your Phantom wallet, and then boom, they lost all their Solana. Bang, like that. Yeah, I always say it takes a lifetime to make it and a second to lose it. Any advice, again, for people? Is this, the QR code and connecting your Phantom wallet, basically getting drained?
If you ever have to move to a website or do any interaction with any website, then it's a scam, pretty much. So that's it. And the way they get you is it shows in your wallet balance. So you open your phone, it says $50,000. You go, oh my God, I'm so lucky. This thing is amazing. And then your emotion gets the best of you and you just try and sell it. You don't think. And to sell it, they send you to another website. And the minute you click consent on that website, it's just a draining piece of code. So you have to be really vigilant, people. Go to the little thing on the Seeker or any Phantom wallet and do the management of tokens and uncheck anything that you don't know you bought. Just uncheck it so that it's not in your balance, because they get you with that balance. They get you with that emotional connection to your balance going up. Just be very wary of that.
Anyway, sorry, we had to include that PSA because it's so important for people to be aware. Again, a lifetime to make it and a second to lose it. So, and it's funny because panic selling is the topic, and this person is, again, maybe the instinct is right. You get 50,000 for free. You try to sell it to take your profits. That's a good thing, but the problem is it's not real.
What's derived from greed, James? It's greed. That emotion is greed. You think you just made 50,000. That's not how life works.
Fear and greed drives markets. Exactly. Mando, any thoughts on emotions and panic selling? We heard from CTO having a process and then executing the plan. I'm very big on planning myself. What would you advise people, especially in these crypto Twitter FUD times?
Yeah, look, I think it's very simple just to say, like, have a plan. But like actually going from A to B, I think obviously CTO has his own like technical indicators and will have specific reasons to get in and out of trades. I'm less technical, let's say, in terms of indicators, but I do have a trade journal for every single trade I do. And having one of those where I literally write out the thesis, the amount, where I'm going to take profit, where I will get out of the trade. And I still do that.
That's magical. I did that with a spreadsheet. I used to have an expression back in the 90s, know your exit before you enter, which is basically, you know exactly where you're going to get out, whether it's at a stop loss or at a profit-taking level. That's magic. Everybody listen to Mando. Very important.
It's not just you write down the thesis, right? You remember what you were thinking about at that time when you put it on, and then you know when you've been invalidated. You know, you can be true to yourself and be like, right, that bit that I thought about there is no longer true, but it also means you don't overtrade. Having to write this down also kind of means that it's kind of annoying, and you're like, okay, I'll take fewer trades and I'll be more diligent about the trades that I want to do, and you kind of get a much better sense of risk reward. So I know I know exactly how much I'm going to make if I'm right, and exactly how much I'm going to make if I'm wrong, and that sort of mental clarity means that if it starts going against you, you kind of know. You kind of know when, like, okay, this is my max loss and this is my max gain, and you get a better sense of like what is a good risk reward trade. Like what am I going to make versus my loss?
Yeah. And what about this thesis, Mando? Get rich quick, YOLO. Is that a good thesis?
I like that thesis too.
Kidding everybody. Oh my God, Marty, any advice on emotions? Keeping your emotions in check.
I think another thing people don't really talk about a lot is there's two types of market participants, right? There's those that have liquidity and those that are trying to make liquidity. And, you know, specifically in crypto, we narrated that it's one thing, one type of investor, one type of, you know, everything's the same, crypto. But actually, there's two distinctly different participants in crypto. There's wealthy people that have distrust for the government and for banks and have a bigger problem than people that don't have money have, which is, what do I do with my money? How do I store it? And they found Bitcoin. And that's what Bitcoin is. It's the global bank vault right now. So that problem is only going up. Okay, we've got global sovereign debt crisis. It's inversely proportional to distrust in the government. So as the government is less trusted, Bitcoin goes up. So I think that's going to go on. And then, you know, you've got in the next 10 to 15 years, all the boomers are going to start dying, and all of that wealth gets transferred to the millennials. What are they going to do with it? They're going to buy crypto. So you've got to have sort of a conviction model in your head. You can't just be trading day to day. If you're trading day to day, then join my community and fucking learn how to do perps. Okay, it's much more safe. You're not going to lose all your marbles. You know, you can do stop losses, and you can trade with leverage and risk less. But if you're looking for the long term, you need to understand the fundamentals of the macro. We're going through a complete transition of wealth. And so in the short term, the exchanges are going to try and flush you out. And selling at the bottom is usually getting flushed out. Guys, you a sucker. You got flushed out. And it happens to everybody. But at the end of the day, you've got to have conviction. Otherwise, you're not an investor. You're a gambler. And you've got to look in the mirror every day and say, are you a gambler or an investor? That's a very important thing to do. If you're a gambler, you're probably going to lose your money. That's what gamblers do. 99% lose everything. So don't blame crypto. You're a gambler. If you're an investor, you need to give things time. You need to understand the bigger picture. Understand in the short term, the exchange is going to try and shake you out. Okay? And specifically people that don't have liquidity, that are in crypto to try and make money, to try and generate liquidity. So they're taking risk. So they're going long with high leverage. Every time we dip, every time there's a bullish sentiment, Donald Trump says there's going to be an SPR. They long. Well, the exchange is not going to let them survive. So in the short term, there's going to be a lot of volatility to the downside. And that's what we keep seeing. And people go, oh, it's the end. No, it's the short-term volatility. In the long term, in the high time frame, we're following global liquidity. We're following the lack of trust in government and global geopolitics. And that's upward. Yep. And follow the millennials. They're going to inherit $150 trillion. What are they going to do with it? What are you going to do with it?
Don't get them too excited in that one, by the way, Marty, because the wealth dispersion is also very concentrated. Yes, there will be a transfer of wealth, but it'll go from the 1% to the 1%. Don't think everybody's getting an even cut. So that's
no. But what is the young millennial son going to do with the money? He's probably going to de-invest.
Going to buy gold, stick it under his mattress.
Going to buy a larger allocation in crypto. That's the point.
Yeah, exactly. Let's talk about actually getting back to Bitcoin network economics. A lot of things are rattling people. This is another element that is important. And again, the ETFs and the treasuries are impacting on-chain activity, which is impacting fees. We covered this a few months ago. Miners depend on these fees plus block rewards to secure the network. Reduced fee revenue may weaken miner incentives, which may threaten the Bitcoin security model. It's again, we've kicked this to death a few times. The big question is the centralization of these tokens within ETFs and treasury companies and lockdown, them doing their own swaps and everything else, is that going to impact the network long term? Again, to the technologists in the room, I'll start with you, CTO, first. How do we overcome this? And should people be concerned? By the way, the fees, Bitcoin fees and rewards hit a 15-year low or 11-year low or something crazy like that the other day.
I mean, it's not so concentrated yet that it is a problem. But of course, if it collapses, that, you know, one or two players control most of it, of course, then it's a problem. That's the whole security model. But we're very, very far from that now. I don't see it really as such a big problem today. Even BlackRock and so on, it's not BlackRock's Bitcoin, it's BlackRock's customers' Bitcoin.
Correct.
So I'm not worried about it at this point. You know, Who knows in 10 years, then we have to revise it then. But no, I'm not worried about it.
So we won't waste much oxygen on it. Marty, for you, Binance all of a sudden appoints a compliance head. What are they afraid of? What's going on here?
I mean, people need to be aware there's tremendous regulatory capture and regulatory rails in TradFi. It's been there since 1933. All of the, SEC, CFTC rules come from 1933, 1934, when there was a large stock market crash. And so that's, you can't do wash trading, you can't do manipulation. Everything is under surveillance. You have to, file and say who you're going to be sending money to if you're an institution or have a fund. But in crypto, there's none of that. Okay. None of it. There's zero regulation in crypto. The only regulatory taste in crypto is for the four, CFTC regulated assets, which is Bitcoin, Ethereum, Solana, and XRP, which are on the CFTC. But otherwise, crypto is a complete wild west and has been since the beginning. So these exchanges can do whatever they want. So I think we've got the first turning, which is the market structure bill. Loomis's market structure bill, probably going to be voted in, she said, before Christmas, starts in September probably. And when they start doing that, they're going to start to put the same regulatory rules on TradFi onto the crypto markets. And, companies like Binance, which, have had a free reign and complete dominance, are going to have to be accountable for their actions. And I think this is just them stepping up and saying, we have to get ahead of this, start to get our ducks in a row. This is good news. To me, this is highly bullish.
You've been covering for years. They would have all their customers' funds that they post on the site, say they have 100% of their customers' Solana funds, and at the same time, they send a bunch of Solana to Wintermute to drop the price. Is that technically illegal?
Well, remember, proof of reserves is just a website. That's not like written off by a third-party auditor like Deloitte's. It's just purely for show. We don't know where they get those numbers. They can put whatever they want. So once again, understand, regulation right now in crypto is non-existent. So this is just them front-running it, bringing in some kind of regulatory compliance head, chief, to start looking at what they need to do. Probably going to find proof of reserves will be accurate and audited, much like Tether. Any interaction with the market maker will be surveilled. There'll be triggers and warnings and flags. Every transaction has to be accounted for. And so you'll see less manipulation. And this happens in every market, but it's normal. It's just, they've had a good run, but I think all exchanges, not just Binance, are going to have to start to be more compliant. And it starts with market structure. So pay attention. We'll be going through it here on the show every week as we get through market structure. And we'll see how it turns out. But this is a good sign to me, very bullish. Binance's dominance is a problem. It always has been a problem. It creates the crypto is volatile fake narrative. Crypto is not volatile. Okay. Gambling is volatile. And so Binance will constantly create artificial volatility in order to flush, sweep, scare out gamblers. And that is not crypto. That is Binance. And so this is a good step.
Before I forget, by the links for everybody or below, I forgot to mention at the beginning, please subscribe to everybody. You probably already just subscribed. We're streaming on all our channels so everybody can see exactly what's going on. Wherever your favorite venue is, our job is just to shine a light on exactly what's going on in the world so you can protect yourselves. Speaking of, you mentioned the Finkster, Larry Fink. There's a lot of concern now. Obviously, heavy into Bitcoin and Ethereum ETFs, but silence. They're not one of the 9 ETFs that are coming. One is already issued. Is this an area of concern for anybody out there? Mando, considering TradFi and everything else, their notable silence on the Sol ETF contrasts sharply with their aggressive moves with Bitcoin and Ethereum.
It has perplexed me, yeah. I thought they would go for the Solana ETF, and I continue to think that is, I've said it a few times, that's the main signal I would be like, right, this is the time to go long Solana. My guess on this is actually just it took a long time to get the ETH story going. And then maybe just like, right, let's just maximize ETH and then we'll go into Solana.
You're right, yeah. That's a very good point.
I don't think it's a case of like, oh, we hate Solana. Like, I mean, how could you hate Solana? I think the point is really just they have to consider it from their ability to pitch it to their funds, their investors. And my guess is that it took over 6 months for the ETFs to even start showing some life. And now that they are, the idea to then turn around and just be like, hey, now we've got Solana, like buy this. And it's a similar story, right? It's different, obviously, in terms of latency and TPS, but the story is no doubt similar. I think they're probably just like, let's give it.
That is an absolutely brilliant, perfect explanation. I won't say I was thinking something similar, but I thought they don't want to rock the cart with their customers, and especially with the fact that it took so long to light this fuse. They waited a year before they started seeing actual flows. It was just trickling in. Compared to Bitcoin, it was a nothing burger, and that has all changed. So I think you're dead right. If they would confuse their customers right now, saying a third ETF, what do we do now? They'd probably rotate from one to the other or not know what to do. So brilliant explanation. We still have a few more stories to get to, and we've got 10 minutes left, so we're going to go pretty fast. This is inflation. A lot of people are concerned about inflation of tokens. I threw a few on here. I could have thrown more. Like Bitcoin and Ethereum are about 0.8% or something like that. Solana's 4.5% right now. Cardano's 5%. Hype is 12%, but Hype is a new token. And I could have sent a lot, but a lot of people are concerned about, inflation for Solana is very high. But remember, you can get 7 to 8% staking rewards. Marty, what do you say to people when people say Solana inflation is high?
I mean, Solana is still relatively new. So in the beginning, these are very carefully formulated models to incentivize the network for growth and adoption. And, we all know that we already failed a vote to get 60% to reduce inflation. So it's definitely on the cards. I've read the proposed Galaxy proposal that's coming up to drop inflation again, back to sort of more of a market-based approach. And that's probably going to pass. So it's just a matter of time that inflation will come down. It served its purpose. I don't see it as a big deal, personally.
And by the way, you can look at tokens that have been around for nearly 9 years, like XRP, and their inflation has been through the roof for nearly 10 years. And it continues with 50 billion tokens in escrow. They dump it every quarter like crazy. So it is an important factor to look at. But if you can get staking rewards that are higher than inflation, you shouldn't be concerned. And you're right. It's to incentivize the validators on the network. Any quick thoughts on this one, CTO, before we move on?
I don't think the inflation is a worry at this point. I'm curious to hear your all thoughts about the treasury companies for Solana. Are we getting them in massive volumes this period, or do you think it will take some time?
Jumping ahead, so this is another top question. We'll get back to something else in a minute, but this is a very good point, CTO. These are the Sol treasury stocks that are out there right now. DFDV has just dropped to the lowest NAV premium of 0.86. Again, 2 or 3 weeks ago, it was 1.5. Took a complete haircut. UPXI used to be the weakest at 0.86. Now it's 0.93. So these things are trading a little bit of a discount. CYFRD, which is the OTC desk token for HODL strategies in Canada. I think you know them very well, Marty. They're at 2.54, but their focus is much more around validators and validation, not necessarily a HODL bag. But these discounts are insane. This is not how they started out at the beginning. Now, Marty, I'm going to give this to you again, if you don't mind talking some more. You were at the ringing the bell at NASDAQ for DeFi Development Corporation. Can you summarize the top 3 big takeaways that you got from that event, what the TradFi boys and girls were thinking, and what you took from it?
Yeah, I mean, it was a pretty eye-opening experience for me. It's my second bell ringing, but this is my first crypto one. This is the first Solana sort of publicly traded company, actually, if you look at it on paper. So there was a lot of Solana representation there. There was, Binance's CFO was there. I met, pretty much everyone in the industry was there because it's a huge day for crypto in general. But what I took away from it was, this Solana machine is bigger than we realize. There's nobody that wasn't represented there, wasn't excited about Solana. So even the NASDAQ themselves, it's a huge thing, and it's just the beginning. DFDV.
You said WEF were there as well. You said the WEF. You said the WEF were there also.
I met a lovely lady, Andrea, a representative of the WEF was there. I mean, there were people from all walks of life, from the UK, from Europe. It was an insane thing. It wasn't just a DFDV thing. It was it was a large event. A lot of people were there to celebrate and meet, and the parties and the meetings were just insane. The people that were there, Representative Kenneth Fitzgerald were there. Every prop trading firm was there. And there was a lot of discussion. Ethereum versus Solana. Ethereum, they're all very much on point. Ethereum treasury companies, sold per share discussions all around the tables. Everybody
Okay,
was participating. But at the end
two
of the
questions.
day, go ahead.
What did they think of Tom Lee, first of all? And second of all, DeFi Dev, isn't it run by a Londoner as well? London.
Yeah,
TradFi guy?
they announced the franchise to London, and I met the CFO of that operation, an amazing guy with a lot of experience in prop trading and hedge fund and raising money, just an amazing guy.
Yeah.
No, they're going big. DFDV is going big, very big. Just understand they have an extremely complex strategy, which involves at least 7 ways to generate yield. They're earning around 22% yield right now. If you compare that to Tom Lee's enterprise, which earns, not even 6. So work that out. It's a 4 times magnifier.
What did they
and
say
that's
about
what
Tom
Tom
Lee?
wants.
Like for them, they must have been excited. And sorry to ask you so much because I'm very
Well, the
interested.
big question is the big thing everyone always says: has Tom Lee ever used crypto? Probably not. So,
Yeah.
I don't think Tom Lee, in his talkings and what he says, I don't think he's really technical. He doesn't really know the ins and outs. He doesn't know the nuances. I think he's 9 months behind, just like we were. I mean, we've all caught up fast, and he will as well. And I think there'll be a massive rotation. Remember, we've got 9 Sol ETFs about to get approved. It's going to shake up the industry in a big way, and that's why everyone was there. I think this is just a taste of the energy of what's to come.
So Q4 is looking positive. That's the takeaway I get. And the canary in the mine is the ETH action that we saw. CTO, I'm going to give this to you first, and then to Mando, and then to Marty real quick. We've got 2 more topics to get through. One, everybody wants to know what to do with their, let's call it altcoin survivor strategy. Some people hold, I've got some altcoins that I bought. I took a little flyer on. I knew 95% of them would go to zero, but that was the gambit on some of them. And I still hold them. But the question is now, what do we do? Do we just bite the bullet, ditch them, or hope for an alt rally, alt season where they rebound? Some of them will, by the way. Some are just dead forever. Who knows? But CTO, what do people do if they're holding things like, I don't know, maybe some Radium, maybe some Jupiter? Do they put a concentrated bet on a winner, like a safe, low risk reward play like Solana, or do they hold them till the end of the alt season?
Yeah, so I've put a lot of thought into that question over the years. And of course, there are many strategies that work. There's many strategies that don't work. The typical strategy that doesn't work, that most people do, is that they hold on to the losers. And then they sell the winners. When the winners go up 50%, 80%, they sell it. They feel that it's great. But actually, that was the winner that was going to go up 1,000% or thousands of percent. And that was the one that had to pay for all the losers. And then they sold that one. So that doesn't work. And that's the most common mistake. And then they hold and hope for the ones that they end up going down 98, 99, 99.9%. So that's what not to do if starting with that. My conclusion that the best strategy in these risky altcoins is to hold them in uptrend and not hold them in the downtrend, because none of them is going to go up 500%, 1,000%, 10,000% with a trend down. It just can't happen. So that's what I'm doing. That's my strategy. But I think if finding yourself in the situation that you're already sitting with a bag that has gone down a lot and then what to do with it, you can only answer it from like an emotional damage perspective. What would be worse? Would it be worse to sell it and then it pumps up 10x, or would it be worse that it goes and loses the remaining money too? That's really, because you have to kind of avoid getting in the situation in the first place. You sell the losers early and hold on to the winners instead of doing the other way around.
Yeah, you know the meme. There's a very funny meme. I'm trying to pull it up. It's like the minute you sell something, it goes up 5x.
Yeah,
or
exactly.
If you hold it goes down. It's always that way, and that's what preys on people's psyches.
Yeah, but I think like you can also ask like yourself, like, does it realistically have a chance to make big returns from here, or is it like a hopeless?
We lost you.
Audio. Okay, Marty, Mando first. What do you think about this? How do you play your bag of losers? Do you
Yeah, God. So obviously, like having a trade log kind of helps with this sort of stuff because I think you know when you want to get out of trades. But I would generally say, and this is something that I sometimes do, all right? Like if a trade has gone down a lot, and for me, I know it's not going to be it's probably not a hot coin. Like suddenly no one's looking at it, and I feel like I'd rather be in majors. Sometimes what I'll do is I'll put on a levered long. So what I'll actually do is move the majority of my bag out of it. And then, like you said, the moment you sell it, yeah, sometimes these things just gap. So like, I'll be like, then you have a defined downside, right? Like, so if it drops another, 15, 20%, right? I'm out. I'm actually liquidated out. But then you're not have your whole of your spot portfolio in something which can just be a mental thing about selling it. I think a lot of people have an issue around holding something and losing out on the gains around it. Yeah. And I kind of sometimes use margin trades as like an option at that point. If it's just like trending at the bottom, but it'll take like 6 months to ever do a move. That's what I kind of look at. But in general, like a big bit of my book is never really altcoins. Like it's not. I just think that people need to appreciate to own majors a little bit more, and you're going to have a good return. It always feels good owning things like Bitcoin. Trust me at that. Like you can sleep well at night, and I think like you need to like realize your losses sometimes and pick assets that you think are going to be there for a while.
Awesome, Marty. Quick 60 seconds. I got one more story to tackle. We're at the hour.
I mean, it goes back to my original thesis there. There's two types of investors, people with liquidity and people looking to get liquidity, and they're very different people. If you have liquidity, you're trying to protect it, then put it into Bitcoin, or I don't even call them altcoins anymore. I call them best of breed or blue chips. And those are the ones that are either have USDC issued on them or USDT, regulated stablecoin, or are regulated by the CFTC. And there's only a handful of them. That's to me are the ones you put your money in if you have liquidity and you want to store it. If you're looking to make quick money and you're a gambler, I'm a technology investor. I'm not a collectible investor. So I don't really have advice on collectibles. It's all speculation and gambling. But I always try and interview or get to know the team, the people behind the project. If they're good people, they know what they're doing. If the code looks good, I try and use it. I look at the GitHub. I look at adoption. I see whether it's a real-world use case. If that's the case, you invest in it. And investing is, you don't just sell when it goes down 10%. You hold it until they've built what they said they're going to build. If they can't build what they're going to build, then you sell it. I mean, if you get too convicted to the charts, I think you lose money. The charts are meant to deceive you. That's the point. They're not buying and selling. They're manipulated, very easily manipulated things.
That's a very good point, Marty.
Give me $100 million. I'll make any crypto token pump, and then I'll make a dump right in front of your eyes.
Very good point, especially regarding the team. I have to stress that enough. I spend an inordinate amount of time looking at the leaders of projects. The answer is there for how they will do. If you have somebody who is a complete sociopath, your token is not going to do well. That's just a fact of life. Final question, and we didn't even get to our whole agenda, but this is a hot one. Everybody is now talking about AI. Everybody is afraid of it, excited by it, thinking about how to allocate towards it. But there was a lot of talk over the last week about how AI will bring about super abundance in the world. Everybody will have everything. It'll be just unicorns and rainbows and all you can eat delicious lobster and whatever you want out there. But the question is, if this abundant world does happen, and we're in Bitcoin because of its scarcity, what, in the future of this abundance, what would the new scarce assets be? It's a tough question. I'll answer it first. I think trust will be scarce in the new world, and I don't believe there will be abundance for everybody. Mando, tricky one.
I continue to, I mean, this is where I have some of my random investments in the belief in like handmade unique items or luxury items. So rare objects, you could look at like wine, whiskey, Pokemon cards, like real world assets, which are made by humans and often have like have a history of investing in them.
What about moon rock?
I haven't invested in any moon rocks.
Well, that's kind of scarce. Marty, what's your thoughts? What will be scarce in
I
the
mean,
future of abundance?
Yeah, I've been talking about this for a long time since we started the show, right? What are people going to do in the future? And I mean, there's many theories, many theses, visionaries come out with this sort of, philosophical question. I think that we will probably see even more wealth disparity. I think the rich will get richer. The people that control and own the AI will get richer. And I think we'll see universal basic income. And that's not a bad thing to me. I've slowly come around to the fact that most people, I think, on Earth actually would be happier if they didn't have to, be in the rat race, fight for every tooth and nail and dollar, and just sit back, do yoga, do art, go online with their AR goggles and travel around Venice without having to leave their homes. So I don't know.
Yeah.
I think we're going towards a sort of a futuristic world where most people will, live in small houses online and have everything delivered, and there'll be a small 1% of the population that own everything. And I don't know how we get around that, because all these technologies just emphasize that, they accelerate that. So yeah, I don't know what people are going to do. Honestly, James, I still don't know.
So, but no word on what will be scarce. Probably, if you could pivot the new scarcity into a new activity for these people,
Entertaining the world,
in life. Maybe Marty dancing or something. Who knows?
Yeah.
CTO, Era Digitalis, I know you've also thought a lot about this. What will be scarce in the future apart from Bitcoin?
Yeah. So in one word, it is assets. I did spend a lot of time thinking about this in the spring. I made a video about it, that what AI cannot replicate is assets. So if you're spending your whole day just learning a skill, like brain type skill, that is perhaps not worth so much. It's not enough. It's not enough to do that. We also have to build some kind of asset, because that's what AI can't replicate. And what is an asset then? Well, it can be financial assets. It can be trust. Like you said, James, trust cannot be replicated easily. Can be audience, can be networks, like relationships. Marty going to NASDAQ, meeting all these people, not easy to replicate a contact network, for example. Yep. That's an asset. And you can make your own list for your own personal case. But in one word, I think in today's world, we have to sit down at the desk and try to create an asset of some kind. If we're not doing that, if we're just learning something, it's not enough in the AI world, because whatever skill it is we come up with, AI can replicate it.
Interesting.
So yeah. I mean, the most obvious case is, of course, financial assets, and I think that's why we're all sitting here trying to figure out how to manage and make them.
Yes, I mean, that's how we're trying to get people to enter into assets now early while they can, right? That's the whole point.
Yeah, the next 2 years will be absolutely transformational, and I've been ringing the alarm on that for quite some time, because literally AI and everything else will take over after 2027. That's my gambit. So with that, everybody, don't forget, follow everybody. All their links are below. If you don't already, you're probably watching all their channels, but this team is incredible. I want to thank everybody for spending time with us every Monday and going through these very profound questions to guide us. Nobody here has an agenda except for helping others. Thank you, Mando. Thank you, Marty. Thank you, CTO. Have a great week, you gang. And thanks you to the mods in the chat too.
For having me. Yeah, Monster Week coming up. Enjoy.
Monster Week, Monster Positive, Marty?
Yeah, Monster Positive, I think.
One of your finger up tweets coming later?
Yeah, I think we just got to get through 106,800, 105,800 around there, and then we're going up again.
One last flush for Bitcoin.
Yep.
How low could Solana go? A lot of people are... Will Solana hit 190, 188? That's the question.
Solana's got to take out 196 first. I think there's red lines all the way down there, even 192 maybe, and then it'll run. Yeah. Got to flush out all these longs, guys. Okay.
Awesome, gang. Stay. The first 2 weeks in September are always bumpy. Seatbelts on, and we're going to make it through to the other side. Q4 is going to be incredible. Pretty sure of that.
Yeah.
Thanks all.
I agree.
I guess.
See you next week, guys.
See ya.